Ladies and gentlemen, welcome to today's presentation on how to grow a small account in Forex trading. In this session, we'll be discussing step-by-step ideas and strategies that can help you maximize your trading potential and steadily increase your account balance. So let's dive right in. First and foremost, it's crucial to set realistic goals. Understand your account size and risk tolerance, and determine a reasonable growth rate that you can aim for. This will keep you focused and motivated throughout your trading journey. Next, building a strong trading plan is essential. This plan should outline your trading objectives, risk tolerance, preferred trading style, and the amount of time you can commit to trading. A well-defined plan provides a structured framework for your decision-making process, helping you avoid impulsive trades. Choosing the right broker and account type is a critical decision. Look for reputable brokers that offer favorable trading conditions, such as low spreads and reliable trade execution. Additionally, select an account type that suits your trading needs, such as a micro or mini account, allowing you to trade with smaller position sizes. Effective risk management is paramount. Determine the maximum risk you are willing to take per trade, typically recommended at 1 to 2% of your account balance. Set stop-loss orders to limit potential losses and avoid overtrading or revenge trading. Now let's talk about developing a trading strategy. It's important to focus on mastering a few strategies that align with your trading style. Whether you prefer technical analysis, fundamental analysis, or a combination of both, choose strategies that offer a high probability of success. Practice and refine these strategies to gain confidence and consistency. To make informed trading decisions, utilize technical and fundamental analysis. Technical analysis tools, such as charts, indicators, and patterns, can help you identify potential trade setups. Additionally, stay updated on economic news, geopolitical events, and central bank decisions to incorporate fundamental analysis into your approach. The combination of these analyses can provide valuable insights into market trends and potential opportunities. Implementing proper position sizing is a crucial risk management technique. Adjust your position size based on the risk per trade and the distance to your stop-loss level. By maintaining consistent position sizing, you can protect your account from significant drawdowns and maintain a balanced risk-reward ratio. Now, let's talk about leverage. Leverage can be a double-edged sword, amplifying both profits and losses. While it may be tempting to use high leverage, especially with a small account, it's important to exercise caution. Consider using lower leverage ratios and avoid excessive risk-taking. Remember, leverage should be used as a tool for efficient capital management, not for reckless trading. One of the most challenging aspects of Forex trading is managing emotions. Fear and greed can cloud judgment and lead to impulsive decisions. It's essential to stick to your trading plan, follow your strategies, and avoid emotional trading. Implementing pre-defined entry and exit points will help you stay disciplined and avoid impulsive actions. Continuous education is key in the ever-evolving world of Forex trading. Stay curious and open to learning new concepts and techniques. Explore books, online courses, webinars, and educational resources to expand your knowledge and refine your trading skills. Regularly review and adjust your approach as necessary. Analyze your trading performance, both winning and losing trades, to identify patterns, mistakes, and areas for improvement. Learn from your experiences and adapt your strategies accordingly. Lastly, stay consistent and persistent. Forex trading requires dedication and perseverance. Stick to your trading plan, be patient, and understand that consistent profitability takes time to achieve. In conclusion, growing a small account in Forex trading is a challenging but achievable goal. By setting realistic goals, building a strong trading plan, practicing effective risk management, developing a trading strategy, utilizing analysis techniques, implementing proper position, then you will be able to grow small account. If you found this video, remember to like, share and comment. Also remember to subscribe to this YouTube channel to avoid missing up on new content. Peace.